afternoon. Today we are going to see what is GST. This is from a material of ICA chapter-1. So GST in India introduction. So before seeing this, what is the major points I have said? After studying this chapter, you will be able to explain the concept of GST and the need of GST in India, and discuss the framework of GST, introduction in India, understanding various benefits according to the implication of GST, explaining the constitution provision of levying various taxes, appreciating the need of constitutional amendment paving the way of GST, and discussing significant amendments in the constitution. So these are the 5 areas you're going to see after this chapter. So for the headlines you're going to see is genesis of GST in India, then after genesis, concept of GST, deficiency in the value added tax system. Before GST, there's value added VAT was there, so value added tax system, what is the deficiencies? And then GST, a cure for ill of existing indirect tax regime. What is the cure? So we are seeing the negative, then cure. Framework of GST, introduction to GST, that is a dual GST, CGST, SGST, UGST, IGST, then legislative framework, then classifying of goods and service, composition scheme, registration, exemption, seamless flow of credit, and the examples of all the things you're going to see. Illustration 1, 2, 3, 4, all the illustration, and then GST common portal. What is the GST common portal? Where is it? Then our GSP and ASPs, compensation cess, and GST, a tax of goods and service, alcohol, liquor. What is the GST? Petroleum, crude oil, diesel, petrol, AFT, and natural gases, tobacco, opium, and Indian hemp and narcotic drugs and narcotics, and real estate sectors. What are the GST and CGST? And taxes submitted in GST Ocean C. Central tax and state tax. These are central tax and state tax. So then the benefits of GST, what are the benefits to economy we get, and then simplified tax structure and easy term compliance, advantage of trade services, then constitutional providence, article 265, article 234, article 246, and the section need of constitution amendments to be there, then significant provision of constitution 101 amendment act 2016, key points over that, and article 246A, power of making law with respect of goods and service tax, article 248 amendment, residues power of legislation amendment, and the power of the parliament to legislation with respect of a matter in state rates and national interest in case of emergency, extend to GST provision under 246A, that is 249, then 250 and 268, the duty of center by collecting and appropriate the taxes, and 268A, empowering and levying taxes, and 269A, levying collection of GST in the interstate appliance. 270, distribution of goods and services, and section 271 is amendment. Define the goods and service taxes and incorporation articles, and article 286 for imposition restriction of imposition of tax on the sale and purchase of goods and goods that are amended. And GST council comes under 279A, and then after 368 article for amendment, and these are the test to knowledge questions. We have 10 questions over that. So first we go through the questions, then we go to topmost of the concepts. We list the benefits of GST can be acquired to the economy. What are the benefits you are going to acquire? So they say 3 benefits: creation of unified national market, boost to Make in India initiative, and boost to investment, exports, and employment. So the main 3 benefits is for employment, economy can be increased by Make in India, and this can be made by a nationalized market. So through GST you have a common tax regime, you can move, there is procurement, removal of all the economic barrier, you can buy anywhere in India, and it's national way, anywhere you can sell it anywhere in India. Boost Make in India policy, as the India need more foreign investment, they made Make in India as an initiative. So though GST for international markets, exports, you get a CZ zones and no tax, and so as the main reason is investment, exports, and employment. So for all the exports, we give no cost of goods is very reduced, and the no tax has been followed. Therefore, the balance in payments also position, and this refund of 90% of the claims in 7 days in economic acknowledgement. So you get the each a refund in 7 days. So very good. So, and there's a case saying that if you want to export without tax and with tax also within the 7 days of acknowledgement, you application, you will get the cash flow. So increase the cash flow, increase the paperwork, and increase even what economic things all over India. So these are the three things you want to for on explaining the helps in examples how particular transactions of goods and services actually is similar into to service GST SGST. So they are particular for goods and GST tax with service tax and good tax. So the central tax and state tax are all levied simultaneously every intraday sales. When you buy a purchase, you want to pay taxable non-taxable values, CGST, SGST. Only in case of you are buying in the intra-state case or interstate case, you only pay IGST. So this is outflow and preview GST. However, both is levied in the same price and the taxable value. This same is understood with the help of the following. So they are giving example. There's a tax rate of CGST is 10%, SGS 10%. The wholesale rate of the steel in Uttar Pradesh, bars and roads to construct the contract also located within the same state. Say 100. The dealer would charge 10 CGST, 10 SGST. Addition to the basic price of goods, CGST will go into the central states while SGST goes to the state. It is important to note that might not actually pay 10 plus 20. In this case, it is entitled to set off the liability against CGST, SGST paid in the eligible purchases. So the inputs of capital goods in all the states of India. Therefore, the paying CGST would allow you use only the credit of CGST paid on the purchase, while the SGST is utilized on the credit utilized in state alone. So SGST credit, the CGST credit cannot be used for payment of SGST and vice versa. So the credit what can be used for the thing. If you have IGST or UIGST, you can use that to utilize all the IGST, CGST, SGST. For all the outputs, you can clear off the debts of the inputs. But if you buy something, that is your state is saying that you buy something from other state and import and bring to your state and you sell it. So when you sell it, you no need to pay the SGST. You can clear off with your what IGST. But the IGST clearance also has steps. Like IGST will clear first your CGST, IGST, then CGST, then SGST. But if you buying something within the state and selling within the state, you can't clear the CGST and SGST. So that's a problem. But the government says so, like it is very good, and that helps you to promote your trade, increase your borders. Not everyone had the approach, but it works on. So example 2 is CGST SGST rate is 10%. Advertising company located in Mumbai is advertising services. Manufacturing soap is located in the state of Maharashtra. So both in same state, says 100 and the CGST 1010. It's badge of service. The CGST compound will go into central states and SGST of Maharashtra. Okay, this is also same thing. Eligible purchases like input stationery, service equipment, service and artists, etc. This would be allow you use only the credit of CGST paid into SGST, but utilizing the credit of SGST alone. The CGST credit cannot be used to payment of SGST and vice versa. So the same thing in the services also. This is the thing which has been going on. So you can understand the summary of the question is explain the example how particular transaction of goods and service tax simultaneously. So you want to give example for goods and for service tax simultaneously. Goods and service, don't separate it. Give 2 examples, that will be helpful. Question, read the question, answer. So what is the need of amendment of Constitution of India before introduction of GST? So GST is come on, and why the need for amendment? They are asking why GST VAT was not efficient, CGST to become. They are asking the cause for that. So earlier the facial power of the central and state were clearly demarched to the constitution. Almost no overlap over nations. The central has the power to levy tax on the manufacturing goods, while the state has the power to levy goods on sales of goods. Where the interstate sales, the central has the power to levy the central sales tax, but the tax is collected and retained entirely by the states. As it the service, it is central alone that was empowered to levy tax. So in this case, what happens is whenever the central make any rules, the central doesn't get any money for the funding. It's all depend on the states. The state holds all the fundings. There, then the central has only the power to leave. So the prime minister's power was less than the chief minister's. So in this case, what happens when the GST has been levied? All the power is based on money, the contracts what you want, the relief what we require, all being come from central. So central no need to get any loan from any state to compensate these things. Like central rather only income was customs. Then the second part is the income tax, and the service tax was not a part of the time. Only the state governments all had all the income, and in case of um, all the manufacturing tax, service tax, everything was in the states. No, states had the more the major income. So when it comes to the central has now all the income, it has the more power. So the central need the power. Central need to hold all the states in their power. So like you can say, after freedom struggle, they had made some amendments to think over not to leave all the states on their power. They should control the states. This may be the idea. The introduction of GS necessary amendment of constitution so to explore simultaneously empower the states and the state to levy collect this tax. The Constitution of India was amended by the Constitution for the purpose, and Section 246 of Constitution introduced thereby empowered the center and the states to simultaneously levy and collect GST. So through this amendment, the state and central will simultaneously discuss about what we want to do and how much tax we need to collect, and they make the amendments and they proceed over it. So this is the power. This is the power play, we can say. Third point is over. So fourth is GST is a designated base tax on consumption of goods and services are both. Discuss and validity of statement. So GST is a designation based on tax on consumption of goods and services are both. So they are clearly saying goods and services are consumed or it being produced. So when the tax is being levied, they are asking the designated. So the fourth point is the tax system is valid. GST is a designated designated based tax on consumption of goods and services or both. The service GST is known as a designated base tax since the tax would accrue to the taxation authority, whereas in jurisdiction over the place of consumption, which is also tended to place of supply. So the GST tax authority, which is jurisdiction over the place of consumption, which is also termed as a place of supply. So the given example, A, Delhi produces the goods and sell the produce to B in Haryana. So the tax should be acquired in the state of Haryana or not in the state of Delhi. On the other hand, other pre-GST regime originate taxation prevails in the cases. Under this origin-based taxation, tax should use the accrued state where the transaction is originated, and given says under the origin-based taxation. So the central sales tax being given lived by the central and collected by the state of the Delhi. It's not by the state of Haryana. So this was a problem we faced in the VAT. What happens is, example, you purchase goods, or example, a goods has been manufacturing in Delhi and it's been bought by a person in Haryana. So there is a difference. Central is a Delhi and Haryana is a place. You can have a different place. Don't worry. Example, we manufactured something in Tamil Nadu and sell it in Delhi, or a person who is using it in Delhi. It's been parts has been assembled and that parts has been used in and sold in Delhi. So who is going to get the GST? Whether this is IGST sale or CGST SGST sale, that's the main cost we want to think. So it's been manufactured. So the GST can clearly states that it's not the point of reaching designation, it's a point of origin. The goods has been manufactured or produced in Tamil Nadu and rather it is being sold to Delhi. So it's been interstate or intrastate sale. Whether the common denomination what has been used in the VAT is always the CST will follow and the VAT of Delhi will be used. Rather than this time, the GST is giving a very obligation. You can produce and you can sell, but IGST has been invoked rather than CGST as GST. So this is what the designation based tax. Whether the goods which is going to a place is going to use or the creation is being used. Even though the good is going to Delhi from Tamil Nadu, we use IGST rather than CGST as GST because it's not an intrastate, it is interstate sale. That's it. This is what the designated sale. A GST is always a designated sale. So, fourth question is answered. Discuss the levitation of GST and otherwise the following: alcohol, liquor of human consumption, a levitation, leviability of GST. Whether a GST can be levied on these goods: alcohol, petrol, diesel, petrol, aviation, turbine, liquid, and tobacco, PM, Indian herb, and other narcotic drugs. So all these four tax are not being taxed in GST. It's rather being taxed on the whole tax regime of VAT or whatever the may be. VAT, the value of tax has been followed in the same states which has been previously followed. It is now is been it's changes has been made over time to come into GST, but rather it was in same price. So, as point is say, there are four things: alcohol, petrol, tobacco, and opium on the grand sale. We see the alcohol is an outside of regime of GST. Same thing, the GST Council, the manufacturing and production of alcohol continues to be subject to state service, state excise duty, and the intra-state sale of CST in one. So, the alcohol, liquor, and human alcohol, it's all in the same excise is being still run. CST VAT also still exists in the alcohol and human behavior because of these various states which have huge alcohol consumption, and alcohol market is a very big thing. If the state loses their power over this alcohol, their economy would make crumble. Example, even you take Tamil Nadu. Tamil Nadu and Goa, Mumbai has the greatest sale of alcohol from the rather any country in states in India. So as to the population, and this alcohol state gives a larger amount of revenue than any GST can provide them. So this makes the states not to leave their power or leverage their power over the GST. So GST again they need to give a share to central too. This may increase the power of central, so the states are holding on the power. So that's a thing. So second thing, petroleum, crude oil, diesel, petrol, AFT, and natural gases. The regard as the petroleum is the same as alcohol. GST is not being levied on these products as the same as alcohol, and this is recommended to the GST Council. But this excise duty continue to live on the manufacture and production of petroleum and diesel and natural gases and intra-state subjected to CST and VAT respectively. There is no change the same as petroleum. So third point, tobacco. Tobacco is viewed as a preview of GST. GST is levy on tobacco. However, the United States has also retained the power to levy excise duty on tobacco. The tobacco product manufacturers in India recently tobacco subject to GST as well as excise duty. You know one thing, the tobacco has been banned in Tamil Nadu. Totally, it's illegal to manufacture or it can manufacture. It's to sell any tobacco that been any stores in Tamil Nadu, but it says so. GST is being levied on tobacco. There is a different angle of alcohol and petrol over the GST. And what's opium, Indian hemp, and other narcotic drugs? Opium, Indian narcotic drugs are within the pre of GST. GST is levied on them. Therefore, how the state and government has retained the power to levy excise duty on the same products and manufactured in India. Recently, opium and Indian herb and other narcotic drugs are subjected to GST as well state's excise duty. GST as well as state. The excise duty is based on not only the 12% and not only in thing. It's all based on both states and central can levy over it. So now the opium, Indian hemp, and other narcotic drugs are illegal to use, but the paramedical industries and any medical industries are using them. They need them. So what they do is they leave excise duty on them, and the same thing GST was being also laid on them. So both tax, I think high tax has been on what opium, petroleum, crude oil, tobacco. If they had been levied, so it would be very cheap. That's the sixth question. We are coming to the end of the four questions. Under CGST, only value addition is taxed and the burden of taxation is to be borne by the final consumer. Examine the value. Yeah, true. So the GST is thing the end user suffers than others. It's a designation based tax, as I said before on the question. All the stages right from manufacturer to the final consumer, the credit of tax paid on the previous stages availed to the set off. So simultaneously, recently only a value addition is taxed and the burden of tax is be borne by the final consumer. So the final consumer takes all the things rather than thing. So what if this comes to a point, they can cheat the system? Yeah, they can cheat the system too. What do you say? You can cheat. Yeah, if a person thinks you don't want to pay the goods and he manipulates the accounts, yeah, if in case, just a suggestion or an imagination, imagine it this way: you purchase a good for 100 rupees, okay, I'm 100 rupees, and keeping it for and selling 2 3 sellers, and as it becomes 150 rupees. So in the 150 rupees I leaving it tax. Based on the current rate, we think that we bought the goods for 100, the rate of 28%, I'm paying 28%, 128 rupees I pay, and taxable value has increased to, now we can say, is 150. So the tax has been increased to how much? 42 rupees. The tax is 42 rupees, is around 28 rupees, is like 28 14 3 42 rupees. 42 rupees is the correct. So 192 rupees is the price of goods you want to sold. What if the end seller thinks so the goods has been spoiled, has been so spoiled, or it is been degrading, he want to sell it in bulk, he can incur loss on that, and he is using costing methods, and he can suffer this loss and gain through other products of the gain, and he sell the same product what he got for rather 150 rupees he has in price, and he sells that in 90 rupees. Clearly see, he sold the product on 90 rupees. What happens? He has a higher input than sold. He can utilize the input. He don't need to pay single rupees to government. Government will suffer a lot. As a GST has been developed and it's not been procured or got the same money from the dealer on the first place on the same year, same month, you can show this just the transactions in the books rather than one person suffers, and the GST is not even a single amount is not even given to government. True. So this is the way people are doing. Black money is surrounding you. So think before government need to think about what they are doing. So sixth question is done, and what about seventh question? Which is the commodities which has been kept outside the preview of GST? Examining the status of taxation on the commodities after the introduction of GST. So the preview of commodities that are kept to preview outside the preview of GST, and the status of the taxation of the commodities which is after the GST. So they are asking about petrol things. You want to check it out. Come on. As per the Article 101 Constitution Amendment 2016, the GST has been defined that supply of goods and service are both except supply of alcohol for human consumption. Therefore, alcohol for human consumption is kept out of GST and by way of definition of GST is consumption. The five petroleum products: petroleum, crude oil, motor spirit, high-speed diesel, natural gas, and aviation turbine fuels are temporarily kept out of the preview of GST. And GST Council has decided to decide the date of which will be included in GST. As while the taxation system, CGST VAT still continues to respect of the state communities. So clearly, what are the products has been said? Alcohol human consumption. Why it's in human consumption? Because it is defined. It's the human. That alcohol is kept out of. Directly is human consumption is kept out. Then five petroleum products. What are the petroleum products? Petroleum, crude oil, motor spirit, it's petrol, and high speed diesel, petroleum, crude, motor spirit, petrol, and high speed diesel, and natural gas, liquid, and aviation petrol, turbine fuel are the five things kept out of the GST council. If you tie the points and decide, and the elsewhere, what happens? You want to write the elsewhere. CGST in VAT has been still continuously in respect to the commodity. And the things is done. So what is it? A dual GST has been implemented in India. Elaborate. What is a dual GST? I want to say first what is dual GST and its meaning. A dual GST is implemented of India with central and state simultaneously leaving this common tax-based system. So tax-based system, income tax we are paying on a single tax, income tax. That's it. We are not paying state tax and income tax, but in the case of GST, we are paying both central and state tax simultaneously on the purchase product, what product we purchase. What about intrastate? We are paying only single tax, but they are asking what is about dual system. Dual system is CGST and SGST, and this lived on the central and intrastate supplies, and the services called central GST, and lived in the state unit territory is called state GST or union GST. Simultaneously, the integrated GST is levied on the administrated by center and every state supplies goods and services. India is a federal country where both the central and states has been assigned the power of levying collective duties through appropriate legislation. Both the level of government has a distinct responsibility to perform according to the division of powers and proceeding to constitution, for which need to raise the resources. A DLGS therefore keeps up with the constitutional requirement of official federalism. So do you need to speak? Just a need of time to make the mind and speak to myself. Discuss Article 269 pertaining to levy and collection of GST in the intra-state supplies. Section 269 pertaining to levying and collection of GST to intra-state supplies. So this Article 269 clearly states goods GST is a course of interstate trade and commerce shall be levied and collected by the government of India, and such tax shall be operated between union and the states in a manner in which provided by the parliament by the law and recommended by the goods or service tax council. Here, supply of goods and services both in the course of input into territory of India shall be deemed to be supply of goods or service in both the course of interstate and commerce. The amount also appropriated to the state shall be not form part of consolidated fund of India, where amounts collected as IGST shall be used in the payment of SGST and vice versa. The amount shall not be form part of consolidated fund of Indian respective. This is a facilitation transfer of fund between centers and center. You know how they set off with this CGST, SGST, IGST, the things. The Parliament is empowered to formulate a principle for determining the power of supply, and when the supply of goods and services both takes into place of intra-state trades and commerce. Article 246 stipulates that Parliament, the legislation of every state, has the power to make the laws with respect of goods and service tax imposed by the Union and other states. The Parliament has exclusive power to make the law with respect of goods and service, but the supply of goods and services both takes place in the course of interstate commerce. This is section 244 of petroleum, to all the things we want to speak. So discuss 246 grants power to make respect of, as we speak of the crude oil, petroleum, high speed petrol, aviation, liquor, alcohol. These all the things has been power given the law for the respect of GST. That's it. Bye bye.